On April 2nd, 2025, the United States woke up to a financial nightmare. In less than 48 hours, $6.6 trillion in wealth didn't just disappear, was violently erased. To put that number in perspective, that is the single largest destruction of capital in the history of the American stock market. The heavyweights of the economy, Apple, Microsoft, Nvidia saw $1.8 trillion wiped off their books overnight. The Dow Jones crashed over 2,200 points in one session. Retirement funds were decimated. People watched their life savings vanish in real time. If you looked at the charts that morning, you would think a nuclear bomb had gone off, or a new pandemic had paralyzed the world. But there was no war. There was no virus. There was only a signature on a piece of paper. The cause of this disaster was a massive tariff announcement. When the U.S. pushed China too far, Beijing didn't respond with diplomatic complaints. It responded with an economic kill shot, retaliatory tariffs hitting 125%. The market collapsed instantly. But the money isn't the real story here. Money can be printed. Money can be recovered. What happened in April exposed something far more dangerous. It revealed a pattern, a mathematical sequence that has silently destroyed every global superpower. For the last 300 years, from the British Empire to 1980s Japan, the sequence is always the same. And right now, America has unknowingly walked into the final phase of this trap. By the end of this video, I won't just tell you why the crash happened. I will show you the historical blueprint that predicts exactly what happens next. This is the story of the Empire Trap, and we are living through its final chapter. Most people treat the global economy like a weather system, unpredictable and chaotic. But that is a lie. The financial system is mechanical. It operates on strict incentives and reactions. When you study the collapse of great powers throughout history, you realize they don't just fail randomly. They all follow a specific four-step death spiral. It works like clockwork, and once the gears start turning, it is almost impossible to stop. The first phase is the rise. A nation becomes a superpower by being open. They trade with everyone. They innovate faster than anyone else, and they build products the world needs. They become the center of gravity. Think of Britain in the 1800s, or America in the 1950s. Everyone wants to do business with them. But then comes phase 2, the shield. The superpower gets comfortable and starts to lose its edge. Domestic industries start complaining that they can't compete with cheaper foreign rivals. Politicians, desperate for votes, start building walls. They pass protectionist laws to shield their dying industries instead of fixing them. They think they are saving jobs, but they are actually suffocating the economy. This triggers the third phase, the retaliation. When you put up a wall, the world doesn't just accept it. They fight back. Trade partners respond with their own tariffs. Trade wars turn into real economic conflict. Prices skyrocket, and wealth is destroyed. This is the violent phase. And finally, phase 4, the exile. The former superpower becomes isolated. The rest of the world learns to live without them. Competitors fill the vacuum, and the empire is left alone, holding on to a currency that nobody wants anymore. It happened to the Dutch, the British, and the Japanese. And on April 2nd, 2025, the United States officially entered phase 4. You might be thinking, America is too big to fail. That is exactly what they said in 1929. Back then, the United States was the undisputed king of the global economy. We had emerged from World War I as a creditor nation. Our factories were humming, and we were exporting billions to Europe. The machine was perfect. But then, fear set in. American farmers were struggling with falling prices due to overproduction. They demanded the government do something. Enter President Herbert Hoover. He promised to protect them by raising tariffs on foreign agricultural products. But once the politicians opened that door, every industry in America rushed through it. Textile mills, steel factories, shoemakers, everyone demanded protection. This resulted in the most infamous piece of economic legislation in history, the Smoot-Hawley Tariff Act of 1930. The law raised taxes on over 20,000 imported goods. It was meant to be a shield, but it became a suicide pact. The warnings were everywhere. More than 1,000 economists signed a petition begging Hoover not to sign it. Henry Ford called it economic stupidity. Thomas Lamont of J.P. Morgan reportedly almost went down on his knees to plead with the president. But the political pressure was too strong. Hoover signed the bill, and he signed America's death warrant along with it. The reaction was instantaneous. Before the ink was even dry, the world retaliated. Canada, our closest trading partner, slammed tariffs on U.S. products. Then France, Italy, Spain, and Australia followed. It was a domino effect of destruction. In 1929, U.S. exports to Europe were $2.3 billion. By 1932, they had collapsed to just $784 million. Global trade didn't just dip, it evaporated by 66%. The tariff turned a severe recession into the Great Depression. Unemployment exploded to 25%. 1 in 4 American men couldn't find work. America learned a brutal lesson. You cannot tax your way to prosperity. But sadly, it seems we have forgotten it. To fully understand the gravity of our current situation, we must look further back to the year 1815. The British Empire was the undisputed master of the globe. They controlled the oceans, they dominated trade, and their currency was the standard. But just like America today, the wealthy elite became greedy. British landowners were terrified of cheap grain coming in from Europe, which threatened their profits. So, they pressured Parliament to pass the Corn Laws. These were massive tariffs on imported food. The goal was to keep the price of British wheat high, to protect the aristocracy. The result was a humanitarian and economic disaster. Bread became so expensive that the working class starved. For 30 years, Britain suffocated under its own protectionism. European nations retaliated, placing their own tariffs on British-manufactured goods. Factories in Manchester and Liverpool struggled to sell their products because Europe had built walls in response. The empire was slowly strangling itself, following the exact same death spiral we see today. But then, something rare happened. In 1846, Prime Minister Robert Peel looked at the data and realized the truth. The protectionism that was supposed to save them was actually killing them. Against the wishes of his own party, he repealed the Corn Laws. He tore down the walls. Britain chose competition over protection, and the result? Did the economy collapse? No. Britain entered its golden age. By embracing free trade, they dominated the global economy for another 50 years. This proves that the empire trap is not a law of physics. It is a choice. But sadly, most nations aren't brave enough to make that choice. Most end up like Japan. If you want a crystal ball to see exactly what happens next between the United States and China, you only need to look at Japan in 1985. Back then, Japan was the global juggernaut. They were the world's largest creditor nation, and their companies absolutely dominated the semiconductor market. American manufacturers were terrified. Silicon Valley admitted they couldn't compete with the quality and price of Japanese chips. So, Washington did what it always does. It reached for the shield. In 1986, the U.S. forced Japan into a humiliation called the Semiconductor Agreement. It wasn't a fair deal. It was a gun to the head. It forced Japan to stop selling cheap chips and to open its own market to American companies. When Japan didn't move fast enough, President Ronald Reagan imposed 100% tariffs on $300 million of Japanese electronics in 1987. This was unprecedented. Friends don't usually wage economic war on friends. But the United States was desperate to protect its dominance. The result wasn't an immediate crash, but it triggered something far worse. A slow, agonizing death. Facing restricted access to global markets, Japan's economy turned inward. They became risk-averse. They prioritized domestic stability over global expansion. The fire went out. This marked the beginning of Japan's lost decades, throughout the 90s and 2000s. Their economy stagnated while competitors like South Korea and Taiwan filled the vacuum Japan left behind. Japan's share of global GDP collapsed from nearly 18% in 1995 to just under 6% by 2020. The pattern held perfectly. A global leader faces protectionism, trade partners retaliate or withdraw, isolation follows, and dominance erodes. But there is one terrifying difference between Japan then and China now. Japan was an ally that relied on the U.S. for defense. They had to fold. China does not. We have been watching this slow-motion train wreck since 2018. That is when the United States officially entered stage 2 of the cycle again. Citing intellectual property theft and trade imbalances, the government slapped tariffs on steel, aluminum, and hundreds of billions of dollars worth of Chinese goods. We were told this would bring jobs back. We were told China would pay. But by 2024, the data showed the truth. American consumers were paying billions in higher prices. Manufacturing wasn't booming, it was struggling under higher costs. But the politicians didn't stop. They doubled down. Then came April 2025. The moment the pot finally boiled over. Under declared emergency powers, the tariffs on Chinese imports were raised aggressively, eventually hitting a staggering 145%. They called it Liberation Day, believing this would finally crush Beijing's economic power. But they made a fatal miscalculation. They assumed China was Japan. They assumed China would fold. Instead, Beijing didn't blink. They retaliated with their own tariffs, peaking at 125%, and they halted the purchase of key American exports like soybeans entirely. The market reaction was the $6.6 trillion collapse we discussed at the start. But the real damage wasn't just on Wall Street tickers, it was in the physical world. China began decreasing its oil imports from the US by 90%. They shifted their agricultural orders to Brazil and Argentina. They proved they could replace American suppliers overnight. Meanwhile, American companies found themselves stranded. They couldn't sell to their biggest customer, and they couldn't buy from their cheapest supplier. We thought we were isolating China, but in reality, we were isolating ourselves on an island of high prices and low growth. This is exactly what Stage 3 looks like, the escalation. And once this stage is complete, there is no going back to normal. We are now watching the fourth and final stage unfold in real time, the exile. The pattern dictates that once protectionism and retaliation destroy the old relationships, the economic geography of the world gets permanently redrawn, and the evidence is terrifying. While American media was focused on the crash, China's trade surplus with the rest of the world quietly hit $1 trillion. While trade with America collapsed, their exports to Europe, Southeast Asia, and Africa surged. The Belt and Road Initiative, which many dismissed as a geopolitical vanity project, has suddenly revealed its true purpose. It was a lifeboat. China saw this coming, and they built an entire economic ecosystem that functions without the United States. Meanwhile, companies are not rushing back to America. They are fleeing to neutral ground. Mexico, Vietnam, and South Korea are the biggest winners. As global supply chains are being rebuilt around the United States, not through it. Take semiconductors, the very industry we tried to protect. Despite billions in subsidies from the CHIPS Act, the fundamental reality remains that you cannot build a global industry behind a tariff wall. Chips require a global supply chain that passes through 6 different countries. By isolating ourselves, we aren't protecting our tech sector. We are cutting it off from the lifeblood of global trade. We are protecting low-value manufacturing while strangling the high-tech industries of the future. But the most dangerous consequence is silent. It's the erosion of the US dollar. The dollar's power comes from its use in global trade. But as China, Russia, Saudi Arabia, and the BRICS nations begin settling trade in yuan or local currencies to avoid American tariffs and sanctions, the demand for dollars drops. The world is slowly rewiring its financial nervous system to bypass New York. These are structural changes that, once established, cannot be easily reversed. The world is learning to function without American permission, and that is a bell you cannot unring. The pattern is not a prophecy. It is a mechanism. It operates on the cold logic of incentives and mathematical inevitability. I have proven this to you using 3 separate historical disasters. We saw how Smoot-Hawley destroyed global trade in the 1930s. We saw how Japan lost its economic soul in the 1980s. But we also saw how Britain saved itself in 1846 by having the courage to reverse course. And that is where we stand today. America completed Stage 3 in April 2025. The question now is whether Stage 4 becomes a permanent grave, or whether we find the political courage to turn the ship around before the damage becomes structural. But waiting for politicians to save you is a dangerous bet. The window is closing. Every day that passes, the global system rewires itself a little more without the dollar. The exile becomes harder to reverse. So what do? First, you must respect the machine. Understand that American dominance is a historical circumstance, not a law of physics. Second, you must position yourself accordingly. Diversify your wealth out of assets that depend entirely on the dollar's global reserve status, because that status is bleeding out. This is why you need to be here for what comes next. What I have shown you today is just the surface level of the trap. The machine is far more complex, and the next 24 months will determine the financial fate of this country for the next century. I am going to break down exactly how this system operates, piece by piece, until you see the entire structure with perfect clarity. The pattern is real. The fourth stage is here. If you want to survive the transition, you need to be prepared. Subscribe to the Money Files right now. Do not let the next phase catch you sleeping.